Hi everyone, this webinar is going to be on the economic calendar, and a very important tool used in order to trade the financial markets successfully and with calculation. You want to make calculated trades. The whole idea is to use certain tools that will help you make calculated decisions when getting into the financial markets. As you can see, I'm on the Trader24 website, forex.trader24.com. From here, you can access our very own economic calendar. Under the Research tab at the top, you will find the Eco Calendar. Simply click on that, and the Eco Calendar will open. Okay, so here's the economic calendar. It might seem a bit much at first, but it's rather simple actually. Once I go through it, you'll see that it's not rocket science whatsoever. What the economic calendar has all the macroeconomic data, also known as news events around the world that move the markets. Okay, unemployment data, retail sales, employment data. When the heads of national banks say a speech, it moves the market. So we want to see what announcements coming out when, what time, and how, or what impact it may have on the market. This way, we know what to expect. We can look out for it and get into the market with a calculated position. So first things first, what I want to do here is obviously adjust the time zone. Majority of our clients are from South Africa, and our time is GMT +2. So there's no point you looking at a different time zone. We want to see what's happening locally in terms of time. So we click on Adjust Time Zone, and the drop-down menu here, we need to select the South African time zone, so which is GMT +2 Harare Pretoria time. So just make sure you click on GMT +2 Harare Pretoria. Daylight savings at the moment in this current time of year, daylight savings is off, and then I want you to click Submit. Once you've clicked on Submit, you're now looking at local times of the announcements. Okay, very, very important. There's no benefit to a trader whatsoever to be looking in a different time zone other than the country that they're living in. So let's start from left to right. First of all, you've got the date. So today, for example, 20th of August, you have the time it's coming out. This is a 24-hour clock, so you can see early in the morning we had a few announcements, 3:30 in fact. Most of us are probably still sleeping. Then we have the currency that the announcement is affecting. So obviously the monetary policy meeting at 3:30 this morning was affecting the Australian dollar. So there you have it. Straight away you can see what currency to focus on here. Then you've got probably the most important aspect of an economic calendar, the importance or high impact level. Now, 3 bulls means high impact, 2 bulls means medium impact, and obviously therefore 1 bull means low impact on the market. Now, I always recommend traders to only focus on the 3 bulls. These are the announcements that move the market, the announcements that will potentially give you an opportunity to get in with a buy or a sell. Sometimes you do have medium impact announcements which do also offer you an opportunity to get into the market. So at the end of the day, I do believe you should focus on high impact as well as medium impact, but definitely don't waste your time with any low impact news announcements. After the importance level, you've got the event. So the type of announcement you're looking at. So for example, at 3:30, monetary policy meeting minutes. For some of you, you might not know what that is. So what I want you to do is there's a little box. There's a little box on the corner here. If you just click on the detail box, it comes up with a bit of information, a specification box on everything you need to know about this particular news announcement. So here it tells you a bit of an explanation of what it is and the expected outcome. So more dovish than expected minutes could be taken as negative or bearish for the Aussie dollar, while a more hawkish than expected minutes could be taken as a positive or bullish for the Australian dollar. So it's telling you, depending on the outcome of the announcement, the Aussie can either go this way or that way. So you'll be prepared to either buy or sell come the end of the announcement. If you want to get rid of that, just click on the little box again and it goes away. Now, as you can see, certain announcements don't have figures. For example, meeting minutes, or if it's a speech, if Ben Bernanke or Mario Draghi is saying a speech, there's no figures that come out. It's purely just verbal, and you can see it on Bloomberg.com, or you can watch Bloomberg TV or CNBC Africa, but usually you have figures here. So that's the reason why you have an actual, forecast, and previous column. Now these are very, very important. The actual result obviously only comes out once the announcement is released on the dot. Actually, they're pretty spot on in terms of time. For example, inflation expectations out of New Zealand at 5 o'clock this morning, the results come out 5 o'clock on the dot, sometimes a few minutes before. Hardly ever you see a delay, but sometimes they do come out sooner rather than later. So I do recommend that you do keep your eyes on the economic calendar at least 15 minutes before the announcement is expected to come out. Then you've got the expected result, the forecast. The forecast is always there, and it's there to give a trader a gauge into what they can actually expect from the outcome. And based on the forecasted result, you can make your decision as to whether the market will go up or down, if it's higher or lower than the forecasted result. And then obviously you have previous, so the previous result from the previous announcement the month before or the week before. I'm just going to take you through an example of last week actually. So what we're going to do here first of all is we're going to go to date range, and let's have a look at the effect of the non-farm payroll report that came out on August the 2nd. Remember, we spoke about this a few weeks ago in a webinar. So I'm going to click on August the 2nd. I'm going to scroll down. 2:30 in the afternoon was the release of the non-farm payroll report. Okay, if I click on this box here, it tells you everything you need to about the non-farm payroll. But then at the bottom, this is guys, this is really what you need to focus on. The usual impact, the usual effect it has on the market. A higher than expected reading should be taken as positive or bullish for the US dollar, while a lower than expected reading should be taken as negative or bearish for the dollar. So it's telling you the forecasted result was 184,000. So they were predicting 184,000 jobs created. The actual result was 162,000. Okay, that was less than the forecasted result. So going back to this paragraph here, it says, while a lower than expected reading should be taken as negative for the dollar. So as a result of this negative outcome, the dollar obviously dropped in value. So if you look at the dollar yen, for example, you would have seen a dip. If you look at the euro dollar, you would have seen it rise against the dollar. So this is exactly how to play it out and how to prepare yourself for a trade. So what I'm going to do now is I'm actually going to go to the platform, and I'm going to show you the effect that this non-farm payroll had on the euro dollar at this time. I did it a few weeks ago, but let's just have a look. Okay, so I've got an hour chart here. I'm going to scroll back, looking for the second. As you can see, over here on August the 2nd, there is a clear bullish move of the euro against the dollar as a result of the poor announcements or less than expected non-farm payroll figures. So guys, this is just an indication of the kind of movement you can expect from an announcement, and that's why the economic calendar is so important, because if you never had an economic calendar, there's no way you're going to know when to trade, what it's affecting, what to trade, how to trade, or the expected outcome. So that's why beginners always need to trade with fundamental data. Now, I used to be a full-time trader, and I used a lot of technicals as well, and you'll find a lot of people do use technicals as well as fundamentals, but I believe combining the fundamentals as well as the technicals will put you in a much better position to make successful trades rather than focusing on one or the other. But fundamentals should always be taken into account. It doesn't matter how many technicals you have, you can never underestimate the power of fundamental announcements. Okay, so you can look at a date range in advance, for example. Obviously, over the weekend, there's not too many announcements going on. Let's have a look at Monday. Let's have a look at tomorrow. Let's see what's happening tomorrow, August the 21st. I'm going to filter my results now. So you can filter by currency. So, for example, if you only want to see the US dollar, you unclick all the others. And let's make it all high impact. So now I'm applying my filter to make sure that I'm only seeing the high impact or significant announcement affecting the US dollar tomorrow. Apply filter. There you go. As you can see, at 4 o'clock tomorrow South African time, or 2 p.m. GMT, is the release of the existing home sales report. 3 bulls. It's a high impact news event. You're likely to see some movement with any dollar related pair. So dollar yen, euro dollar, pound dollar, even gold. At 8 o'clock or 6 p.m. GMT, you will be the release of the FOMC meeting minutes. There's no figures. Like I said, it's a verbal announcement. And this is also likely to affect any major USD pair, as well as gold and silver, or the bullion market, which is what they call it. Now, focusing on the existing home sales report here, you can see the forecasted figure of 5.15 million. Now, what can you expect is this figure, 5.15 million. But now, if I click on this box here, let's see what to expect here, the usual effect. A higher than expected reading should be taken as positive for the dollar, while a lower than expected reading should be taken as negative for the dollar. So guys, what we're looking for here is we're looking for any figure higher than 5.15 million is going to boost the dollar's value tomorrow at the release of this announcement at 4 p.m. Okay, like I said, it's usually on the dot that it comes out, and that's when the market starts to move. So you guys really have to be in the market, ready with the platform, ready to open your trades. If you wait 5-10 minutes after the release, that might be too late, or not necessarily too late, but you might have missed some of the opportunity to make more money than you could have. Okay, so this is exactly it right here. You've got exactly all the information that you need. 4 o'clock tomorrow, potential movement with the US dollar. The expected reading 5.15 million. Anything above that figure, good for the dollar. Anything below that figure, negative for the dollar. Okay, so let's say the announcement comes out and it could be 6.5 million. That's a great result, almost 1.5 million higher than expected. The dollar is going to boost up in value. Okay, so you're going to buy the dollar against the yen, or you're going to sell the euro against the dollar, or you're going to sell the pound against the dollar, and you're going to sell gold, because gold has a negative or inverse relationship with the dollar, that when the dollar strengthens, gold weakens. And you know, that's also something very, very important. It's very easy to trade certain commodities when the dollar is moving in the market, just like gold and silver. On the other hand, if the actual result comes out and it's 4.5, for example, so 0.6 million less than expected, it's a negative result for the dollar, and less homes sold, less buildings created, less people working. Construction companies might not be too busy at the time, and it's less work for everybody. It's not a good sign for the US economy. So you might see a drop in value of the US dollar. What will you do in this case? You will sell the USD Japanese yen. You will buy the euro dollar. You will buy the GBP USD, and you could buy gold, because gold will move up if the dollar moves down. Pretty simple stuff, but like I said, it's all about timing. There's no point you looking at this news event at 4:30 and trying to trade the dollar, because by then you could see a correction in the market. Don't forget, this is all short-term market opportunities. You've got to be in and out of the market, especially on announcements. More technical traders will focus on pips and candlestick formations to get their profits, but sometimes it's very easy to make some good trades, some good money off the fundamentals, but usually it's short-term. So guys, you really have to be in the market on your economic calendar and the platform at least 15 minutes before the announcement. So tomorrow, for example, 3:45, have a look at the potential movement of the dollar and get ready for a trade. So I'm going to go back to my filter now, and I'm going to make sure that I click all the different, make sure I click all the currencies. Okay, so as you can see, I've added all the other currencies as well, and the majority of the currencies available on the economic calendar are usually the majors, as you can see. So the dollar, the pound, the euro, the Japanese yen. The Chinese yuan is there, but it's not a recommended currency pair to trade. We do offer it, but the spread is quite wide. So rather stick to the majors, and as you can see, usually you got the euro as well, which is in there, and you can see the pound at 12 o'clock. We have the CBI industrial trends orders, but in my opinion, it's not a high impact fundamental, so rather concentrate tomorrow on existing home sales for the United States dollar, and the FOMC meeting minutes. Let's have a look at Thursday. Thursday the 22nd. Okay, we've got quite a few different ones. As you can see, early in the morning, 3:45, we have the Chinese one, the Chinese manufacturing PMI, followed by a 2:30 announcement coming out of Canada, core retail sales, a very strong indicator of economic health. As you can see, 3 bulls, a high-impact news event. And then we have initial jobless claims coming out at 2:30 as well. So expect a lot of movement with the American market when it opens, the dollar and the Canadian dollar respectively. High impact on Thursday. So obviously on Thursday, you guys want to focus on maybe the GBP versus the Canadian dollar, or the euro versus the Canadian dollar, as well as the euro versus the US dollar and the pound versus the US dollar. Now, don't forget, there's no point trading 2 currencies that are releasing announcements at the same time, because if retail sales came out now and were positive, and initial jobless claims came out which were positive for the dollar, there's no point trading the US dollar versus the Canadian dollar. You're not going to see much movement. So obviously you want to trade one currency that is going to strengthen against another currency. That is the whole idea here. So that's it for Thursday. And what's important, what I do recommend for every single trader, is to always check the fundamentals the night before. See what's coming out the next day. Most of you are working, you're all full-time employment, but some of you that manage to squeeze in a trade when there's an opportunity, I do recommend you look the night before so you can plan your day around it. So you can say, right, at 2:30, I need to be looking at the dollar. Unemployment claims are coming out at 2:30 local time. Let me eat my lunch at 1 o'clock, or let me take my meeting at 3 o'clock, or let me work my way around, my day around 2:30 so I can be able to open up a position. And don't forget, it's not time consuming. You can get into a trade 5, 10, 15, 20 minutes, get in and out the market. You can set a stop loss if you like and keep the position open. And the beauty of this is that you can make money off the moving market after the announcement. And a lot of the time the market corrects itself sooner rather than later, or rebounds as they call it. So you can make money both ways. You can make money if the dollar goes bullish, and then if you see it starting to correct itself again, you can make money off the bearish move when it goes back to normal rates. So this is the beauty of the market, and you can get in and out when you like. And I really recommend economic calendar to anybody who's looking to make calculated trades. There's a few other economic calendars out there. Obviously, there's a lot on the website available. This is the one free of charge from Trader24. I know a lot of my clients do use the Forex Factory economic calendar, which you can find at forexfactory.com, www.forexfactory.com. A bit of a different layout, but exactly the same concept, guys, exactly the same concept. It has high impact news events, medium, low impact, and it has everything you need to know. But most importantly, just make sure that you look at the time zone every single time you want to have a look at your economic calendar, because you need to make sure it says GMT +2. Please make a note of that. And if you're using the Forex Factory economic calendar, you should look for GMT +2 Jerusalem time, and that is what you're looking for. I think it's Jerusalem Pretoria time as well, or Jerusalem South Africa time. So just make sure you keep an eye on that, because sometimes you can open the economic calendar and you'll see that it's back to -5 GMT, and that's not the time you want it. So don't make the mistake of looking at an announcement 5 hours too early or anything like that. Now, some figures will change as the days go by before the announcement comes out. And so always just make sure you see that, for example, maybe non-farm payrolls, they might have on the Monday, they might have forecast of 100,000, and on Tuesday it might change to 120,000. So always keep updated with the economic calendar just to make sure you got the updated forecast announcements. Now, what you can use to coincide in conjunction with your economic calendar is do a bit of homework. Go to Bloomberg.com, see what these analysts and what these guys are saying about the announcements now. They usually talk about the high impact announcements, so retail sales, unemployment claims, jobless rates, speeches when Ben Bernanke makes a speech, and any high impact announcements or fundamentals they usually discuss live on television, or they'll put an article together on the Bloomberg website, what they're expecting, so you can actually get into the market before the announcement comes out and literally make the most of the move, because sometimes the volatility created by the announcements, it makes it very difficult to get in and out of the market when you want. So sometimes it's better to prepare yourself to get into the market before the announcement is expected to come out, and obviously then you can make the most of the move, and obviously, you know, the quicker you get into the market and the more pips you make, the more money you can make as well. So just keep that in mind. So guys, this is the economic calendar. Very, very basic stuff here, very brief. If there's anything that's not clear to you at all, just have a word with your account manager. They'll go through it with you. Usually what we do encourage is we do often go through the first trade with the new traders, the very new traders who haven't opened up a trade yet. We go through the economic calendar together with them, and your account manager should obviously also keep you informed of any of the high impact announcements coming out in the days to come. So just keep an eye on the keep an eye on the dollar tomorrow, guys, at 4 p.m. Existing home sales coming out, followed by the FOMC meeting minutes. So what you want to focus on in terms of instruments is the dollar versus the Japanese yen, the euro versus the dollar, the pound versus the dollar, and gold, obviously, because that's going to move as well. So that's your opportunity tomorrow afternoon to trade the dollar. And please write any questions you have down right now. I'll leave the video running for a little bit, and we'll get your account manager to answer all your questions tomorrow. Just want to thank you guys for joining tonight's webinar. It was very brief. I just want to keep it very short and to the point. That's everything you need to know about the economic calendar. And feel free to ask your account manager any questions you might have. And I look forward to your questions, and thank you for attendance. I look forward to speaking with you again next week.